Hey guys, it's Frank here from Altcoin Buzz, and today I'm going to talk about what I think will be the next killer app in DeFi. I know some people agree with me, and that is derivatives trading on decentralized exchanges. So in this video, we're going to look at how derivatives volume compares to spot volume using CoinGecko. We're going to have a look at the range of decentralized margin trading exchanges, in other words, which provide derivatives. We're going to have a look at some of these existing exchanges and look at some of their recent updates. But most interestingly, for me at least, is this VAM, the VAMM. This could really be a game changer for derivatives trading in a decentralized manner. And I'm really excited to see this go live. Right now, it is in the test phase. They have the product on the Kovan test network. But I'm really excited to see what they could achieve moving forward. And again, based on the volume that I will show you, I think it's very exciting and it could potentially have some massive gains for the holders of this token. And then finally, we will look at some more derivatives exchanges which I uncovered through a Google search, which aren't actually listed on DeFi Prime over here. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button, as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. So to get started, we'll first of all have a look at spot trading versus derivatives trading. So spot trading, of course, is where you just buy the asset using the assets that you have. Whereas derivatives trading, it offers margin trading, where you essentially borrow money to buy assets, and of course other derivatives where you can buy assets in a very special way. You can Google the definition of it, but basically they are complex ways of purchasing cryptocurrencies. Now, spot trading here has 24-hour volume. If we just have a look at the top three here, you see Binance with 3.3 billion, Coinbase Pro with 370,000, Kraken with 250,000. Now compare this to top derivative exchange volume. And if you look here, the 24-hour volume, Binance over here with 5.7 billion, Huobi Futures with 5.5 billion, CoinTiger with 4.8 billion, OKX, BitMEX, many here, and you can see that they're all in the multiple billions of dollars. So spot trading just doesn't compare to derivatives trading, and that's what makes DeFi derivatives so exciting, and any coins which are revolutionizing this industry are very exciting. And again, we will get into which one I think is the most revolutionary one in just a bit. Now, if you go here on DeFiPrime.com, you can see that for the margin trading exchanges, we have MCDEX, MarginDDEX, DYDX, and Fulcrum. Now, DYDX is the one which I am most familiar with, and we will have a look at that in a bit as well. Although I must admit that none of these are sort of major players in the industry right now, apart from maybe DYDX. I haven't really heard of these, and you don't sort of see them being talked about that much compared to the others. Now, if you head over here to the top decentralized exchanges on CoinGecko by trading volume, DYDX is currently in 16th place only with a 24-hour volume of 4.2 million, dwarfed by Uniswap's 541 million. So right now, the strength of Uniswap compared to pretty much every exchange on the market, even Binance, is their number of coins, their number of pairs. Of course, they have the automated market maker, but they have a huge number of coins and pairs compared to every other exchange, and they are the place to go to list new coins. But again, this is spot trading. This is, a lot of these coins are newer coins, maybe don't have that much volume, but the real volume, as we saw prior, comes from derivatives trading. So I'm not entirely sure why this is so low for DYDX, but I have a feeling that it might be something due to liquidity or to user experience or features on the platform. So DYDX offers derivatives in the form of Bitcoin and ETH. You have to trade PBTC to USDC and WETH or WETH to PUSD. But unfortunately, the trading volume is quite low. So for Bitcoin, you have just 600,000, while ETH for some reason doesn't have any trading volume here. I'm not sure if they just haven't recorded it correctly. And Link just has 2,384. So these are very pitiful volumes, especially compared to centralized exchanges. So obviously there's something missing in the derivatives space. And just to show you the excitement around these derivatives, I'll read out this article from a few months ago by DYDX. They say DeFi traders are snatching up DYDX's Bitcoin derivatives, pushing the non-custodial trading platform to surpass Uniswap and become the leading decentralized exchange by trading volume. So again, this was several months ago. I think this was published on May 20th. There isn't a date for this specific part of the article, but I think that's when it was published. But it's interesting to see that it surpassed Uniswap volume. And here, of course, they talk about BitMEX trading $2.2 billion in daily volume. Again, these are the massive numbers that you see from derivatives trading on centralized exchanges. So if we could see that on decentralized exchanges, and if you hold a token which profits in some way from all this trading, that could be absolutely massive. And as they say here, this makes perpetuals one of the most popular assets in the crypto markets. Perpetuals are a form of derivative trading. One thing I found a little bit concerning here, according to Token Terminal, DYDX is on track to reach around $2.25 million in annualized revenue, but this is directed to the platform's development company. So it seems as though the profits are all go towards the company, while Uniswap is estimated to hit $4.7 million in earnings for liquidity providers. So I think this is potentially a big difference between the two, that Uniswap pays the liquidity providers and essentially goes to the users, whereas this seems to pay the platform's development company. And in addition, DYDX charges 0.15 to 0.5% for takers. 0.5% is a very high rate. If it's anywhere close to that, then that's not really the kind of rate I would be looking for if I was trading perpetuals. So they have a pretty slick website, the most powerful open trading platform for crypto assets, and you can go ahead and trade here if you want. As I say, I haven't done so myself yet. Now, of course, one of the downsides is that as a US citizen, you cannot drive this new tool. You can't test drive this new tool, according to DeFi Dad here. So, this is not really what I'm thinking of when I'm thinking of decentralization. I'm thinking of borderless solutions, where you're not limited by the country that you're in. So not ideal in terms of decentralized platform for trading. But here we come on to VAMs, a deep dive into our virtual AMM, that stands for Automated Market Maker, and VAM for short. So again, this is a blog by Perpetual Protocol, and we will learn about how they potentially have the answer to creating a great experience and great product for derivatives. So a brief history of AMMs. Automated market makers, or AMMs, are used in the DeFi space to describe a protocol or an application that utilizes a math function to determine the price of an asset and subsequently facilitate the exchange of two or more assets. So as many of you probably know, the most famous example of an AMM is Uniswap, a decentralized exchange DEX that uses a constant function of x multiplied by y is equal to k to conduct token swaps. So here they go over the notable improvements to different aspects of AMMs. And they go on to say here that building on this chain of innovation, we're proud to share a new type of AMM pioneered by Perpetual Protocol, the Virtual Automated Market Maker. And again, this article was written on August 17th, so it's relatively new, and they don't actually have the product on the mainnet yet. They're currently still in the testnet, so we're still pretty early phase for this project. And here they talk about the current limitations of AMMs. They go on to say that perpetual contracts are the most popular product for crypto traders, as we've learned already before. They say that one way to enable leverage and short selling with an AMM are to encourage liquidity providers to provide tokens in the AMM pool and allow traders to borrow assets at the leverage they want. And then they go on to detail this approach through this link. However, the shortcomings of this approach are that liquidity providers suffer from high impermanent loss and open interest is bound by the pool size. So these are, of course, pretty big problems, and this is what Perpetual Protocol aim to solve. So Perpetual Protocol's solution, virtualizing the AMM. Perpetual Protocol introduces an entirely new approach known as a virtual AMM, which radically expands the application space of AMMs and enables perpetual contracts for the first time. I think we'll be hearing a lot more about this moving forward, especially as the product goes live and people start seeing success with it. Perpetual Protocol's VAM uses the same x multiplied by y is equal to k constant product formula at Uniswap. Now here they go over how it works. They give an example of when you provide assets to the vault and how it works when someone enters a trade here. I'm not going to go over all the details. You can read this, of course. I always add all the sources, links down in the description below. But here you see the unique properties of VAMs are, first of all, that there are no liquidity providers needed. Because of path independence, vaults will always have enough collateral to pay back all the traders trading against VAMs, assuming all the under-collateralized assets are successfully liquidated before going bankrupt. In contrast to conventional AMMs, whose liquidity comes from liquidity providers contributing assets to facilitate trades, the liquidity for VAMs comes directly from the vault sitting outside of the VAM. In other words, there is no need for the existence of liquidity providers to bring liquidity for a VAM to work. The traders provide liquidity to each other. And then furthermore, since no liquidity provider is required in a VAM, there is no impermanent loss to begin with. I myself have suffered from impermanent loss, so I definitely look forward to a solution which fixes this problem. Now in this section they talk about managing slippage, and again it gets quite technical, but the general idea is that they have found a way and they are still working on this method of decreasing slippage. And the conclusion here is that the Perpetual Protocol is the first implementation of the VAM, and it's on the Kovan testnet right now. Now another link which you may find useful, again will be down in the description below, is the Perp token distribution. They give a summary of all the distribution. They talk about the testnet launch and the trading competition traction. They have the light paper. They talk about the utility cases for the token, perp distribution. All the details that you might need are over here to check out. And of course, Perpetual Protocol is already trading. Here on CoinGecko is currently priced at $1.95, but of course the real thing that you should be looking at is the market cap, which is currently 17.1 million. Currently, a very small percentage of the supply is circulating, only 8.7 million out of 150 million. So this of course means that the fully diluted valuation is much higher than the current valuation of 17 million. Now, of course, this has only been live for a few days now, since September 10th. Really not much to say about the price. It's been more or less steady on the whole. But we are currently in rank 301. I personally think this has room for growth. I haven't bought in any yet. I'm pretty loaded up on alts right now. I'm going to be getting into the Frontier launch. I posted a video about that just earlier today. But this is definitely one which I have my eye on. And you can see right now it's trading on Balancer, Uniswap, BKEX, and Hotbit. And here, if you head over to their website, you can see a brief description again of what they do, how it works, the utility of the tokens. And then of course they refer to their investors here. Again, Alameda Research, they were also involved in Frontier that we looked at earlier today. Binance Labs, obviously some good big names here. And you can also see the team behind the Perpetual Protocol. They are not anonymous. You can learn more about the team by clicking on this link. And of course, as they say, the protocol is live on the Kovan testnet right now. And if you go over to kovan.perp.exchange, you can actually test this out for yourself. So overall, this looks like an interesting protocol. I want to learn a bit more about it. I do think that it has a lot of potential. And I look forward to hearing more updates about them and probably getting in at some point. I must admit, one of my weaknesses is probably that I buy too many alts. It's usually not recommended to get more than about 8 to 10. Because it's just hard to track them all, but that's one of the reasons why I'm not getting in, is because I have too many already. But it definitely seems very promising moving forward. Now you might recall that we only had 4 exchanges listed here in the margin trading on DeFiPrime.com, but I have come across a couple others. So according to a Cointelegraph article here, a new decentralized exchange lets users trade commodity and crypto derivatives. Fetch.ai is launching MetaLex, a decentralized exchange that allows its users to trade commodity and crypto derivatives. The users will be able to gain exposure to traditional crypto trading pairs, as well as commodities like gold, silver, cobalt, oil, and even the stock market indices. Here is the website for MetaLex. Access the world's first DEX focused on token-based commodities trading. So again, this article by Cointelegraph was written just a few days ago, so this could be interesting. I'm not sure exactly how it works, but again, I think that the VAM is the real groundbreaking technology, and that's really what excites me. But it's interesting to note that you have a range of other DEXs trying to get into this derivatives market. And in terms of MetaLex, they just have this tweet from 20 hours ago saying that their token is trading on Balancer Labs and they're working to get it listed on CoinMarketCap. So this seems very early on. If they're not even on CoinMarketCap yet, might also be interesting to look into. And then furthermore, I came across another one called Vega. this seems like a very odd website. They say it's a protocol for creating and trading derivatives on a fully decentralized network. Very strange website. I'm not sure if it's on purpose like this, but yeah, I haven't looked into this just because the website looks so weird, but it just goes to show that there's a lot of new up-and-coming projects right now. But again, the highlight for me for this video is Perp Protocol, and I am very interested in getting in and learning more about their updates. So let me know, what do you think will be the next killer dApp for DeFi? What do you think of Perp Protocol? And if you haven't used Uniswap or you haven't been active in the DeFi space, I strongly urge you to do so. It's really exciting, and I think the DeFi boom has literally only just begun. I mean, have a look at this number to demonstrate that. Decentralized exchanges currently represent 1.4% of the global exchange volume. Again, there's a massive amount of growth yet to be seen for DeFi, and especially for DEXs, I think. All right, guys, that's been it from me for today. So I look forward to seeing you in the next one.